Hello, and welcome to another episode of APMEX Answers. Today we're covering an important topic about de-dollarization, how it impacts the dollar, and more importantly, for us, how it impacts gold. For those of you who are keeping up with the latest trends in finance and geopolitics, you may have run across the phrase de-dollarization. But you may not understand what it is or how it relates to us here. In this video, we hope to give you a base understanding of what de-dollarization is and how it pertains to gold and other precious metals. Since the end of World War II, America has been an economic superpower. In part, this is due to the dollar's dominance in international markets. The US dollar has been accepted worldwide as a reserve currency for the better part of the last century. It was originally backed by gold, but then later the petrodollar system was established in the 1970s. The petrodollar, for those of you who don't know, is an agreement between the US and Saudi Arabia that essentially set the standard for oil to always be traded in US dollars. This has meant that every country in the world has needed to hold US dollars if they hope to import oil. So, just about everyone. And if the US needed to borrow money, well, no problem. Everyone has dollars they can loan us. It has essentially allowed the US to spend without limit because there is always a market for the dollar. And that's coming to an end. Now, this part is important. When we say it's coming to an end, what we mean is that not a single analyst is debating whether de-dollarization is occurring. They're just debating how fast it's going to happen. So why now? Well, there are layers of reasons, but mostly it's geopolitics. It's not all adversarial countries that want to see an end to dollar dominance either. The fact is that the dollar being the reserve currency of the world is an advantage that mostly benefits the US. European countries would love to see the euro established as the reserve currency of the world, for example, even though most of them are very closely allied with America. But the current push for an alternative to the US dollar is coming from the BRICS nations. These are Brazil, Russia, India, China, and South Africa. BRICS is a coalition of these countries, but there is a good chance they are expanding in the near future. More on that in a moment. There is also a collaborative effort playing out among BRICS nations to create a new reserve currency that is backed by gold and other commodities. This is where things start to get a little more complicated. The US dollar's hegemony is tied to the agreement between the US and Saudi Arabia to trade dollars for oil. Remember, we mentioned the petrodollar earlier. If that goes away, it strikes a blow to a major cornerstone of the dollar as a reserve currency. China just brokered a peace agreement between Iran and Saudi Arabia, and both of those nations have officially applied to join BRICS. BRICS, which again is working to displace the dollar as a reserve currency. You see where we're going with this. If Saudi Arabia joins BRICS and agrees to accept their new currency as a medium of exchange for oil, it ends the petrodollar. To quote Monica Crowley, who served as assistant to the US Treasury Secretary, if the petrodollar were to end, that would mean the end of the US dollar. If Saudi Arabia decides to join with America's enemies here and start trading oil in different currencies, that is going to undermine the entire global economic system. In January, Saudi Arabia's finance minister said in Davos they were open to trading oil in other currencies. I'm paraphrasing here to be succinct, but you get the gist. It's important to note that China has a dominant position in the BRICS coalition. They make up about 70% of the economic might of the group. Okay, so you probably want to know how this affects gold, right? First, there's the obvious play here. If a new reserve currency and a new global economic order is gold-backed, then demand for gold is going up. No other way to dice it. Silver bugs are probably wondering if the world's most reflective metal is joining gold as part of the basket of commodities backing up that currency, and the answer is probably not. There's just not enough silver for that. Gold is very precious, and it's been saved as a currency for millennia. Silver is actually primarily used in industrial applications, and it's not recycled. So although there is a great deal more silver in the world than gold, most of what has been mined has been buried in landfills and dropped to the bottom of waterways. Think about it. When was the last time you saw a refrigerator recycled to recover the silver content? It's just not economical to do so, so it doesn't happen as often as it should. But on the plus side, silver does tend to trend with gold in terms of price action, so as long as that continues, we'll probably see silver's value increase as well. Another aspect of this is that gold does well when there's a lot of disruption. People get scared and they put money in gold. It's called safe haven for a reason, so we expect physical gold to do well the more nervous people get about the US dollar losing its status. This last part is less obvious, but it has to do with inflation. When the US dollar loses its status as a reserve currency, it does mean that inflation, potentially very high inflation, would likely be visiting the US economy. The US dollar could become weaker and imports much more expensive. I mean, we import just about everything. So just about everything may go up in price. High inflation is likely to result in persistent negative real interest rates. And there's a very high correlation between gold's price performance and real interest rates. So now you're probably wondering, when is this all happening? What's the timeline? No one can be certain, but if upending the current global order was simple, easy, and fast, it's reasonable to assume it would have been accomplished by now. We don't know if events around the world will suddenly accelerate or if they'll stall. That said, we expect this would be more of a long-term development rather than a sudden event, and you can bet the US will fight to maintain its status in the world. Either way, though, it seems a safe bet to say that gold is going to remain a popular safe haven asset, and any substantial moves related to de-dollarization could be significant for gold's long-term prospects. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.